Hey, good afternoon. Good evening. It's Sunday evening. It is Sunday, the market is opened, oil opens up on Sunday evening around 6:30. It is 7:41 now, so we're really at the beginning of the new week. And I think this is a great time because one, the kids are not in the house. But number two, the market is really at an ideal location for a long entry, and hopefully, I'm going to be able to convey to you exactly why that is. All right. Um, so, what I'm going to do is start with the daily chart, 1 year, 1 day. Okay. And on this chart, the only two things there's only really two things that I want to get from the daily level. This is like the 50,000 foot up view. There's only two things I really want to get. I have a different set of indicators I like to use for this. I like to use a DMI oscillator because it really just paints the candles green if the market is moving up, if it's in an uptrend. And I like to use the um, ATR trailing stop. Let me remove all my drawings here. Great. Okay, so here's the ATR trailing stop on the daily, and it's obviously in an uptrending mode. And this is the DMI oscillator, which is in a uptrend. And then I have a breakout indicator, which confirms that in fact we are making new highs, which are these green bars. And finally, I have the ATR, okay, which is um, basically indicating the average true range over the last 14 periods. And in this chart, we're looking at the period being 1 day. So the ATR is telling us that we have a period of a ATR of 1.16. Um, and that's what we're doing on the daily chart. Now let's look at the 12-hour chart. I'm sorry, let's look at the 8-hour chart, but I'm going to convert it to the 12-hour because I want you to see how stable that guy is. You go here and there, okay? All right, so you can see that, the ATR is just incredibly accurate and very reliable in terms of tracking where support is, and like we've talked about in the past, there are many different types of support, but this is one way to get a major support level. And I just basically just trace over it with the trend line tool. Okay, on this level, I'm trying to find a stable support level that seems to be holding up over the last few days. And that's what we're doing. That's what we have. So on the 12-hour chart, we have a very stable support level that seems to be holding up. It's not flipping around and changing from support to resistance. All right. So remember that. Now we move from 50,000 to say 30,000 feet up. All right. And now we're going to go down to our 4-hour chart. All right. So on our 4-hour chart, you can see that you're flipping. You go from resistance, support. It's not as stable as the 12 hour, but useful. All right, that's our 4-hour chart. All right, all right. Now this is where things change it up a little bit. I'm gonna pull up a local chart. This is you're close up on I want to get microscopically close up on the chart. Okay, on the shoreline basically. And here you see a lot of pivot levels. You see the 12-hour support level that I drew. You see the 4-hour ATR. And you can see a 50 period moving average and a 200 period moving average. So right now, let's blow that up. Right now you see that we are pulling back. We're cycle low back to support. Okay, just like right here, you saw the market retracing down, back to support, then it bounced back up. So this is time, when you start seeing the CCI getting around -100 on the other side of this band, that's when you start measuring, if I go long, how much risk do I have to take? All right. So let's move in a little closer with the 1 hour. All right. This is great. This is really amazing. This is a great entry here because several reasons why. Here's your 12-hour support level. You have already, this is the previous high, previous low, all things that we had to go over many times. But if I measure from the previous high, how far have I moved from the previous high? So I've already moved $1.13 from the previous high. All right, let's write that down. $1.13. $1.13. All right. This line is the previous high. This is the previous low. I'm sorry, this is the previous high. This is the previous high right here. We're in this session now, which is today. So the previous day's high, I was right, is 1.13. We've moved $1 from the previous high. That's like the ATR. That's why the ATR is important, because if you move $1.13 from the previous high, most likely you're going to move up. Okay, it's like the market likes to make a reversion back to the mean. It doesn't like to live at extremes. All right, most of the time it just kind of oscillates up and down in a sideways pattern. Market trends about 40% of the time. 60% of the time it's doing its sideways activity. All right, so we moved 113 from the previous high. That's called retracement. All right, and we are in the AVZ zone, the average value zone, between the 50 period and the 200 period moving average. Okay, you rarely get below this 200 period moving average in an uptrend. Okay, so that's number two reason. One reason is you pulled back quite a bit, one ATR. Number two reason is you're in this average value zone, right? So, and another reason is you're right up on this support level, S1. If you were to look at all the support levels since we started this uptrend, notice that the market rarely touches these support levels. Here we blew through a lot of them, but most of the time, you'll touch it and move up because the overall market energy is to move up. The market is oversold. CCI is -140 on the 1 hour. And so right now is also it's important to point out that the market is low volatility right now. Sunday evening market just opened. You don't see that the candle here is just moving dramatically, and it won't. So this is the time to really think about getting in. Your range so far, since we started this session today, the range has only moved the market has only moved, let's measure that, probably about 29 ticks. And our average true range is $1. So it's very likely we could move from here to 64.53. Okay, very likely. Matter of fact, let me move my stop down right there. Okay, so in this trade, I'm risking, if I'm long right now, and I'm basically saying, hey, market, you're not going to go below this 12-hour support level. All right. And if it does, all right, I lose 1,500. There's 150 ticks between here and here. $1.05. All right. I don't think it's going to move there because of all the reasons I just described. You moved $1.13 from the previous high. You're in the average value zone. You're in a strong uptrend on the daily chart, so the overall energy is going up. And you know, you're also up on this S1 level, right? We really haven't been blowing through those much. This is a great time to enter because the market it's not as low volatility right now, and we've only moved 30 ticks. We barely, you know, started making the range. So it's probably going to vacillate in here. You know, it's going to vacillate around a little bit. And my anticipation is within the next day, you're going to make a $1 move. You're either going to make a $1 move going down, okay, $1.15 going down, that's the average true range, or you're going to make a 115 move going up, right? So this is the kind of the kind of setup I like to see. One, you've moved. Where you have come from is the previous high. You moved one ATR, 113, right, into the average value zone. You're above the 200 period moving average. Haven't broken that. You are around some support levels. You are one ATR approximately from the 12-hour support level. This level's been holding up for days and days. It's been holding up since December. So you know, why would you want to break down now? Right? Okay, and even if it does break down, I've made so many profitable trades since December that even if you take me out with that 1,500 loss, you know, I've made way over that in terms of the ROI. So that's trading, you know, that's what it's about. It's return on risk. So ever since December in this uptrend, I've been taking off, you know, anywhere from 800, 1,000, $1,500 trades, just like this, just in this fashion. And so many times. And so when you do take that hit, you know, your ROI is incredible. You know, you're basically doing hundreds fold on your risk. The risk is 1,000. I never risk more than 1,500 or 1,800, and you're always taking off, banking those winners, taking those small profits, so that when you do take a hit, you know, you still have a high ROI. So when you hear people talking about wait for the trade to come to you, this is exactly this is a great example of that. Waiting for the trade to come to you. I can't state that better. You know, this video is why I want to put this together, because this is the reason why it works. And this is a perfect example of the strategy and how over time, you can see that if you have, a few couple hundred of these, or even 100 of these, you're getting up there into the high numbers. All right. So we're going to stop here, and I will post this to the website.